Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments through the coming days. Now, we had this payrolls report on Friday. The markets are still sort of to a certain extent trading off the legacy of it. We had a very interesting report, fairly mixed. We had the headline which disappointed to the downside, missing expectations, but we had the average hourly earnings picking up, which gives sort of the FOMC a bit of a mixed report to go on. Does it sort of go on the headline report, or does it go on the average hourly earnings, which are picking up in the fact that they're needing to drive through inflation through the system, and that's what they're ultimately looking for. So it's a bit of a confusing one to really take for the market. There was an initial sort of disappointment on the headline, but then the market factored in the average hourly earnings and it sort of pulled the dollar strength again. That also pulled equity prices lower. Big sell-off on Wall Street on Friday. That's continued into the new week, really, in the European session, as the markets have just gradually fallen away. Now, we've got Chinese New Year this week, so no real steer from the Asian markets, many of which are closed throughout the week. But we have had Chinese FX reserves, which came in and continues to fall away in January, $100 billion to the downside. So it remains a big pressure on the yuan, and that is sort of filtering through in terms of sentiment. You're seeing the safe haven flows, which are beginning to sort of strengthen again. You're seeing the yen strengthening. You're seeing gold price remaining on a strong run higher. I'll talk about that in a minute. But also we're seeing sort of the likes of the euro, which is fairly solid in its breakout, which is interesting as well. Equities under pressure. Bond yields still at low levels as well. So moving into this week, we're still at this sort of safe haven move on the markets. Now we've got the Yellen congressional testimony this week to look forward to. Now, this is the first time that the market would have been able, that the Congress would have been able to question Janet Yellen on the Fed rate hike and exactly how she sort of comes across. Possibly a bit dovish. She is historically dovish, and obviously we've got all this sort of market turmoil still going on, and it'll be interesting to see what sort of hints she leads with, and the market is certainly going to be moving off that. That's 3 o'clock on Wednesday UK time, and also on Thursday as well. So how are these all factoring into Forex markets? Well, we're seeing the euro, which, as I said, broke out last week above that 110.50 to 111 pivot band. That now becomes supportive. Now, that support is still holding on Monday, and I still think that that is going to be the fact that we're still holding on to this breakout. We could be nicely building support for the next move higher. Interesting, and the implications that that has for risk appetite generally. The other fact is we've got the yen under pressure again. We had a sharp sell-off last week down to 116.50. Has held the support, but continues to put pressure on again today. There's a big support band between 115.50 and 116.50. That needs to hold, otherwise the markets could come under real pressure, I think. And for sterling, well, we had a breakout last week. It's had a retracement of that move on the payrolls report on Friday, which saw a bit of dollar strength coming through. Now sterling needs to find that support at 143.50 to 144.50. That is sort of the benchmark of the watershed now. If that got broken to the downside, we can see the sell-off coming through, and if it holds, then the bulls could start to gain control again. In terms of equity markets, well, we've seen, as I said, a big lot of pressure coming through once again. Anything I think that sort of suggests that the Fed isn't going to tighten because of a deterioration in the economy, I don't see that as a positive. I think that's a net negative, even though you might see a bit of a sort of a near-term uplift on any sort of negative news. I don't see that as being a positive. I think it's going to be a move that gets sold into. And to be honest, I think we're seeing the sort of continued legacy of that on the back of the ISM data that was so weak last week. And we're seeing, so the DAX has broken through the 93.08 key support. It's a big Fibonacci level and a big support, and that's broken. Now could continue down even for a full retracement towards the 83.55 level. The S&P 500 again looks like it's going to be testing more than likely its key support initially at 1870 today. Below that, you're looking at 1812. That is a massive sort of 2-year floor in the price if it comes back towards that low. FTSE 100, again, another market that's breaking supports today. Looks like it's going to be coming back towards 56.40. For commodity prices, well, we've seen this gold chart moving strongly higher. The safe haven flows have certainly benefited gold, and that continues on the run higher. It's sort of looking like it's going to be testing these October highs now that we saw last year, and that is around 1190. So it looks like the momentum is very strong. It is going ahead of itself. It is coming a bit up against some overstretched momentum near term. And arguably, you could say that there is sort of a lack of sort of upside potential in the move, or diminishing upside potential, should we say, but still remains strong at the moment. The oil price, the big driver still in the markets, is falling away again. And the big $30 floor on WTI is beginning to come under pressure again today. Now, the big support, 29.25. Remember that number, because if that goes, you're looking back at a test of the lows again, and that would be this sort of recovery period over. So lots going on. Not so much necessarily in the economic calendar though this week. Not a huge amount. I think Janet Yellen will dominate proceedings. A little bit of UK trade data Tuesday. A little bit of industrial production also coming out Wednesday for the UK. But the main sort of thing from the economic data front is the US retail sales. That's on Friday, 1:30. That needs to start picking up. If we're going to see the average earnings growth coming through, if we're going to see the Fed tightening, you need to see the retail sales, the man on the street spending money. And at the moment, still not really happening. And again, expectations around about flat on the ex-autos data there. So still not really showing too much signs of a retail sales pickup. But yeah, the main focus is Yellen this week. Lots going on in the markets as ever. So I wish you good luck in your trading, and I'll speak to you next time. Thank you.